Here is a detailed summary of AMD's 2025 Q2 earnings call transcript, focusing on key financial metrics, management commentary, forecasts, and risks, ideal for reading aloud. Good afternoon, everyone. We are here to discuss AMD's 2025 second quarter financial results. Today, we'll be referring primarily to non-GAAP financial measures. Financial highlights and performance. AMD delivered record revenue of $7.7 billion, a significant 32% increase year-over-year, driven by strong performance in both our EPYC and Ryzen processor sales. These strong sales more than offset headwinds from export controls that impacted Instinct sales. We also achieved a record $1.2 billion in free cash flow for the quarter. Gross margin. Our non-GAAP gross margin was 54%, marking our sixth consecutive quarter of year-over-year margin expansion. This improvement was driven by a richer product mix, although it's important to note that an $800 million inventory write-down related to data center AI export controls reduced our reported GAAP gross margin to 43%. Segment performance. Data center. Revenue in the data center segment grew 14% year-over-year to $3.2 billion. We saw robust demand for our EPYC processors across cloud and enterprise workloads, and increasingly for emerging AI use cases. The fifth-generation EPYC Turin processors saw a significant ramp, and we achieved our 33rd consecutive quarter of year-over-year share gains. Our data center AI business revenue declined year-over-year due to export restrictions on MI308 sales to China and the transition to our next-generation MI355 series accelerators. However, we made solid progress with MI300 and MI325, and the MI355 series is now in volume production, with a steep ramp expected in the second half of 2025. Client and gaming. This segment was a standout performer, with revenue increasing 69% year-over-year to $3.6 billion. Client revenue reached a record $2.5 billion, up 67% year-over-year, led by record desktop CPU sales, particularly our Ryzen 9000 series and X3D processors. We also saw a strong adoption of Ryzen AI in notebooks and accelerated Ryzen adoption in commercial PCs. Gaming revenue grew 73% year-over-year to $1.1 billion, driven by strong demand for our semi-custom game console SoCs as inventories normalized, and robust demand for our latest generation Radeon 9000 series GPUs. We also announced a new multi-year collaboration with Microsoft for custom chips for next-generation Xbox devices. Embedded segment revenue was $824 million, a decrease of 4% year-over-year. Demand continues a gradual recovery, with pockets of softness in industrial customer inventory reduction actions offset by strength in other markets. We expect improving demand in test and measurement, communications, and aerospace markets to drive sequential growth in the second half of 2025. Management commentary. Dr. Lisa Su, Chair and Chief Executive Officer, highlighted the strong second quarter results and the broad-based demand across our portfolio. She emphasized the record sales for both EPYC and Ryzen processors, underscoring the company's leadership in high-performance compute. Regarding AI, Dr. Su expressed optimism about the MI355 series ramp, noting its competitive positioning and strong customer interest for large-scale deployments. She also spoke about the significant progress on the MI400 series and the Helios rack-scale AI platform, which is expected to deliver leadership performance. Dr. Su also touched upon the company's commitment to the AI software ecosystem, particularly the advancements in RCM. She reiterated AMD's long-term vision to scale its AI business to tens of billions of dollars in annual revenue. Jean Hu, Executive Vice President, Chief Financial Officer and Treasurer, provided further detail on the financial performance. She confirmed the record revenue and explained the impact of the inventory write-down on GAAP gross margin, reiterating the strong non-GAAP performance. Ms. Hu detailed the segment operating results, including the operating loss in data center primarily due to the inventory charges. She highlighted the strong free cash flow generation and the company's capital allocation priorities, including continued share repurchases. Ms. Hu provided the outlook for the third quarter of fiscal 2025, forecasting revenue of approximately $8.7 billion, plus or minus $300 million, representing about 28% year-over-year growth. The midpoint of this guidance is driven by strong double-digit growth in both client and gaming and data center segments, with the latter benefiting from the MI355 ramp. Non-GAAP gross margin is expected to be approximately 54%. Management's forecasts and future outlook. Third quarter 2025. AMD expects revenue of approximately $8.7 billion, with strong double-digit growth in client and gaming and data center. The data center segment is expected to see significant sequential growth driven by the MI355 ramp. Second half 2025. The company anticipates significant growth in the second half, led by the MI355 series accelerators and continued EPYC and Ryzen share gains. Longer term, AMD sees a clear path to scaling its AI business to tens of billions of dollars in annual revenue, driven by the next-generation MI400 series and the Helios platform, with significant customer interest for large-scale deployments in 2026. The company believes it is well-positioned for sustained long-term revenue and earnings growth, capitalizing on the industry-wide AI transformation. Significant risk factors. Export controls. U.S. export restrictions continue to impact MI308 sales to China, with license applications still under review. Any delays or denials of these licenses represent a significant risk. Competition. The AI market is highly competitive, and the company faces intense competition from established players and emerging technologies. Supply chain and production. Scaling production for new AI accelerators like MI355 and MI400, and managing lead times for these complex components remains a critical operational challenge. Customer adoption and demand. While demand for AI and high-performance computing is strong, the pace and scale of customer adoption for new products, particularly in the AI space, are subject to market dynamics and customer investment cycles. Inventory and related charges. As seen in Q2, inventory write-downs related to export controls can significantly impact profitability. Key takeaways and lowlights. Highlights. Record revenue, strong growth in client and gaming, robust EPYC demand and share gains, and positive early indicators for the MI355 series ramp. The successful integration of acquired software and hardware teams to bolster AI capabilities is also a key positive. Lowlights. The impact of export controls on MI308 sales and the related inventory write-down significantly affected GAAP profitability. The data center AI segment experienced a year-over-year revenue decline due to these factors. Most important statements from CEO and CFO. Dr. Lisa Su, CEO. We delivered very strong second quarter results, with revenue exceeding the midpoint of guidance as higher EPYC and Ryzen processor sales more than offset headwinds from export controls that impacted Instinct sales. We see a clear path to scaling our AI business to tens of billions of dollars in annual revenue. We are very excited about our next-generation MI400 series, which is another giant step forward on our roadmap. Jean Hu, CFO. We delivered record revenue of $7.7 billion, exceeding the midpoint of our guidance, up 32% year-over-year. For the third quarter of 2025, we expect revenue to be approximately $8.7 billion, plus or minus $300 million. The midpoint of our guidance represents approximately 28% year-over-year revenue growth, driven by strong double-digit growth in our client and gaming and data center segments. In closing, AMD demonstrated strong execution in the first half of 2025, setting records and building momentum for the second half, particularly in its burgeoning AI business.